So, I know we were just going to go over this pretty quick, but, I did find on CNN uh, pretty, pretty well put together take on the higher interest rates. But what happened? Why don't you get started?
Sure, it's great if I don't know if you plan on listening to the Powell video, but I listened to a few of them. They're really moving up rates to try to hedge inflation, to stop it from continuing to rise.
Mhm.
He talked about, patterns and long trend patterns. They feel they're having some impact with with the previous rate hike they did put in place, but they were not willing to commit to what's going to happen in 90 days, just saying there's so much going on in the world. And they're not only monitoring inflation in our country, but I read an article today that was talking about 10% inflation in Europe.
Wow.
Yeah, it's just things are moving. So the effect of that, which our show is about real estate, the effect of that on real estate is substantially higher interest rates.
Right.
And the first line of defense that we saw was people maybe falling off the table on the investment side. We had a couple, and at this point, I think we have a couple clients where it's just like, gosh, it may not make sense for you. I won't say it doesn't, but it may not make sense to proceed with the huge move in recent rates.
Yeah.
But then there's the primary owner, and not only is what he said current rate moves, but they're still talking more future rate moves up. They're not done by any means, and that's not news. But it's still hard every time. The impact you feel when it actually happens,
right,
is big. So it's going to have an effect on sales. At this point, we're still super low inventory. So those who want to buy and make sense to buy and have a long-term plan could still make sense. No one's saying the market's going to be flipping upside down anytime soon. Still, not saying that.
So let me just point out the stats. So yesterday his announcement was a half point.
Yes.
What was that? Basis points up. They were expecting 75, right? So that was some good thing. Or how much of this was already packaged into the market?
They kind of those people who monitor like Fed speak, as they call it.
Right.
They dissect every word and tone of the conversations from people on the Federal Reserve Board. Half point is a huge jump. It's an enormous jump. Our rates have are as high now. The last time they were this high was 2009. So we have the highest rates in 13 years.
Right.
As of today.
Well, it says here the rate for a 30-year fixed rate mortgage averaged 5.1% in the week ending April 28th. That's up sharply from under 3% in November. But where is it now? I haven't looked today. Did it go up slightly more or it stayed the same?
Well, I just looked at one and it was like 5.7.
Okay.
Yeah, it has moved up. And, sometimes there are spikes and they'll come back down. The tough thing about 30-year rate mortgages is they fluctuate daily.
Yeah.
But half point move often, not always, but often can translate to a half point on the interest rate. So you understand, the listeners out there, it's not a direct increase in the rate that you'll pay as an interest rate. It's the lending rate between banks, but often it can translate.
It gets reflected.
It doesn't always, but it can.
Here it did, it sounds like.
Yeah.
And then it says here, for context, the Fed raised rates to 2.37% during the peak of the last rate hiking cycle in late 2018. Before the Great Recession of 2007 to 2009, Fed rates got as high as 5.25. So we've already broken over that. Interesting.
2007 to 2009. So but put that in perspective. That's a very good stat. 5.75, you said?
Yeah.
And the highest rates that were available to the general public to get a 30-year rate loan was still 6%. That was a tight margin. Very, very close to the Fed rate. I think, maybe they pushed up to, maybe they got closer to 7 at that time. I'm trying to remember. That was a while ago, man. Maybe they approached 7, but that was like 1.25 point. pushing above the Fed rate. We have a bigger margin right now between
Right.
the Fed rate of 2.75 and potentially approaching 5.75. So that margin has room to shrink. Doesn't
Right.
mean the rates are going to stay that high because of their recent move, but if there are continued moves, it's going to continue to put pressure upward.